So let's go to the positions real quick because I want to look at these couple of positions. This morning I missed a trade. You know, stock is looking at me and laughing at me saying, FOMO, Serge, come on now. And it got to exactly where I wanted to get in. And then I wasn't at the computer. Obviously, I was doing something else. And then there you go, missed the trade. And then stock, you know, of course, moves 10% after that. And I'm like, yeah, you know, the ones that you don't do, yeah, are the ones that laugh at you and say, hey, buddy, why didn't you do it? And I'm going like, I don't know. I'm not a FOMO type of guy. But we're going to take a look at them now, and let's see if we can get in. Silver just keeps ripping. I mean, absolute rip. Let's see where we are. Oh my God, 91.70. Well, that's just SLV. Spot silver is over 100, and gold is definitely either right at 5,000 or a little above 5,000. So we'll have to find out. Let me look at these two stocks that I wanted to get in. AV, Arrow Environment, and FIGR 6480. We got up to 66. Okay, let's take a look at this first. Figure Technology. Here's the dailies on those. Even with one contract, I'm going to get in these fucking things. Yeah, and then I'll just, yeah. We're going to do a four-legged trade. February, plenty of time. These are movers. 64. So let's go with 62.5. And I'll just look at the different strikes. 62. So we're going to put in a put credit spread. 62.5, 57.5. Credit of 212, it looks like. And then we're going to buy the 65 calls and sell the 80 calls. How much is that? $1.98 debit. Okay. And how much is that going to cost me? 3,500, 700 per. Okay, let's put on 5. Let's see if we can do them at $1.98. No. Okay. Let's go here. Let's see. Let's see. Okay, $1.98 did not work. Let's go to $2. Okay, 2 did not work either. Yeah, the spreads are pretty wide on these. Let's go to 205 and then we'll cap it at that. If not, I'll change the strikes. Let's see if we can get him down at 205. Yep, we did him at 205. So we're on for a 205 debit. So we sold the 62.5, 57.5, put debit spread, put credit spread, and then bought a call debit spread, 65.80. That seems reasonable to me. So let's analyze the trade. Max gain is 15, obviously, right? Because that's the difference between the call debit spread, the strike, 65 and 80. And so 7 to 1 almost. And then on the downside, there's always a downside. So I took in $2 and let me see what the prices are on these things. Let's see what the prices are on these things. Okay, to put the credit spread, I did it at right about 220 to 218. Fine. Okay. So max loss on that is 5. The stock is below 57.5. But I took into that's 3 plus the 2 I put up overall is 5. So my max loss on this is 2,500. My max gain is going to be 7,500. It's a pretty good trade. Reasonable, I would say. Yeah, I would say that's reasonable. That's one. So we did one there. Then if it goes lower, back to 62.5 range, we'll put on another 5. What else is going on? ASST, I'm long the leaps, 500 and 350, 2.5s and 5s. BMNU, rallying a little bit. Crypto actually did rally a little bit. So on BMNU, I'm long 3,500 shares. cost is much less than what TOS is showing because I've been selling cover calls for 2 cycles already. This is the 3rd cycle. Took in a bunch of money again. And then I sold some puts, 5 and 4 puts. I don't mind buying another 1,500 shares. I sold the 5 puts at $1.07, so I don't mind buying another 1,000 shares at under 5. And the 4th I sold at 60 cents, so I don't mind buying another 500 shares at 4.40. Lower the cost basis more, but the calls are going to lower the cost basis plenty. I sold them before actually last Friday's expiration, and took in $1.50 on the 6s, 6, 7s, and 8s. I took in $1.13 on the 7s, and I took in 87 cents on the 8s. Of course, we would like it to rally, get called away, but then if it doesn't, it doesn't. What can we do? Carnival Cruise, I'm long 70 calls. February, I'm long the February 30s, and I was short the February 30s. So February 30s, this week's weekly 30s are going to expire worthless, so lower the cost basis a little bit there. Started getting into Dollar Tree yesterday. Dollar Tree, I bought 20 calls, way out of the monies, but that's fine. You guys got to use calculators, by the way. I bought the Feb 140s for $1. 20 of them. It's not full position yet, but I'm going to buy about 50 of those. FIGR I just put on at 205. In fact, 64.17. Give me another $1 lower. I'll add to it. Open Door, I am long 40 calls. February 6s, and then I had sold the February weekly expiration 7s against it. Those are going to expire worthless, so we're lowering the cost basis a little bit there. SPY, I have the put debit spread on, cost basis 260, about 3, let's see where we are, about 310, so a little bit of a profit there. I got out of PEPG, and today I'm going to get out of WVE. Here's the ZSL trade. ZSL is a 2x ETF, inverse ETF of SLV, down to 230. I had sold the covered strangle last month, bought the shares, sold the covered strangle, 3-4 covered strangle. They expire worthless. So this month, I'm doing it again. This time I'm doing 3-3. Stock is 230. I started doing this about 260. And I started selling the 3-3 strangle, 3 puts, 3 calls, obviously, for a total of 64 cents and 37. So about $1. So this is a $3. Well, now it's a $2.31 number. I'm selling the strangle for $1 for a month. You guys can figure out the percentage. I'm 100% willing to get assigned another 2,500 shares of ZSL at under 2. If it's above 3, it gets called away. Then my selling price, because I took 101 is going to be over 4. So if you give me that kind of premium, I'm going to do this all day, regardless of the position going against me at the moment. So